What is going on with RavenCoin or RVN? It's a token nobody had on their radar, yet it doubled in the last week. Let's have a look at some metrics most people aren't considering and try to figure out how much longer this rally could last. So here's the situation. We are at 2.2 cents. We had a massive pump and dump on the 5th of June, and now the recovery close to those highs of that pump. RavenCoin is in the real world asset space. So the idea is to buy and sell all kinds of financial assets, preferably stocks. So this is how the project launched. Within the space, even after this rally, it has a relatively small market cap of only 340 million. Zebek, which is recently going down but had a massive rally in the last weeks, has a similar market cap. Kita, the leading RWA play on the base chain, is 50% larger. And then of course we've got the very big players. The leader in real world assets is Ondo Finance, worth 2.7 billion. So this gives us a range of how high RavenCoin could potentially go. It's unlikely that we're going to see a 10x from here. Again, this would flip Ondo Finance. That's probably not going to happen. Now, I did publish various videos on RavenCoin in the past, because sometimes we did see these price surges, and I was warning that potentially the tokenomics of RavenCoin aren't that great. At the time, the circulating supply of RVM was growing very, very quickly. Have a look at this chart. This is the coin circulating supply. We started at 285 million in 2018, and this turned to 15 billion today. At the same time, the usage of the chain didn't necessarily grow that much. Here's the number of coin movements over time. So it's not like all of that token inflation is justified, right? In the end, it's okay if the supply is growing, if at the same time the project is growing at the same rate or better, even faster, right? Because in the end, it's about supply and demand. If demand outgrows supply, it's okay. If the supply continues to grow very quickly and the demand doesn't, that's a problem. And so that then explains this chart here. This is RVM relative to the US dollar. At first, it doesn't look too bad. As in, since September of 2019, we only went slightly down by 20%. Of course, with a lot of volatility in between. But really what matters is relative performance. And this now is RavenCoin relative to Bitcoin. And this now shows the ugliness of token inflation. From 2019 to today, RavenCoin underperformed by 94%. There's no reason for an altcoin to do that poorly besides the team and the early investors and the insiders selling off continuously tokens, continually taking profit and making money of the retail holders. Here is RavenCoin relative to the rest of the market. So this is the RavenCoin dominance. It's a measure of how relevant RavenCoin is relative to all of the cryptocurrencies. And again, from top to bottom, this fell by 97%. But there is something interesting here, right? When we zoom in a little bit, sometimes we have these pumps. The long-term trend is clear, but there were instances where RavenCoin outperformed the rest of crypto by 150% over there, then 130% over here. And now recently, this rally is again slightly above 100%. Now, where does this come from? I believe it's market manipulation. Yes, sometimes there are news around a project and this can help price appreciation, but especially when a lot of people bet on falling prices of an asset because the tokenomics aren't that great. Then it is very profitable for the market makers and for the whales to sometimes manipulate the price to the upside in order to liquidate people. Let me show you what I mean. Check out the trading volume. This is now the spot market. It's all on centralized exchanges. And there was 142 million worth of trading volume on Upbit in the last 24 hours. Now compare this with the derivatives market. So this is now perpetual futures. This is levered bets on the price. And here we saw 656 million worth of trading volume in the last 24 hours. So really, the price discovery of RavenCoin does not happen on the spot market. It all happens on the perpetual futures. And so when an asset goes up very, very quickly out of nowhere, many people are betting on falling prices. So the financing costs on the perpetual futures go extremely negative. The shorts have to pay the longs in order to bet on falling prices. There was a massive peak in financing costs. It was annualized almost 200%. Then those shorts took profit as the price deflated. And now the price continues to go up, but the shorts aren't that active anymore. Have a look at how much the spot price is now correlating with the open interest on the perpetual futures. As there is more and more bets on the price, the spot price is going up. As there's less bets on the price is going down. And so with the recent rally, again, we saw a lot of open interest on the perp market. And this, of course, creates those sweet liquidation fees, what the market makers are after. And so people always try to make up news. They always try to find out why did a price rally. But in the end, it can just be manipulation. If an asset goes down over the long term, when it isn't used that much, when the project doesn't see any growth, and when the token inflation is very high, then we sometimes just see those short squeezes that will deflate at some point. Now, there is a bit of risk toward this. So for example, here, imagine you saw this short squeeze over here. And historically, those tops align pretty well. Sometimes we do see a secondary squeeze. If enough people bet on falling prices, then the market makers just push up the price higher. And this could happen again. So I'm not saying we are going to see a deflation of RavenCoin instantly. Who knows? But I am saying it's likely that it's going to continue to underperform over the next months, potentially even years. And so I'm also considering to potentially bet on falling prices here. Now we have to manage our risk. There are two ways to manage the risk. Either we use a stop loss, and if you get stopped out, we just open another short position again after the secondary short squeeze, or we post that much collateral that even though we do see a secondary short squeeze, we still don't get liquidated. There's two ways to write this potentially. If you're considering to enter a short as well, make sure you don't get squeezed out in case we do see a secondary run up. That's definitely possible, but the long term, I believe, continues to be bearish for RavenCoin. Now, after so many years in crypto, I think there's only two strategies to make money in this market. It's either trying to find altcoins very early, potentially using wallet tracking, buying things before the masses do. And while this is a strategy that can work, it's also comparatively risky. Things like Virtual Protocol or SPX 6900 went up massively this year. But if instead you bought Optimism or IMX or Polygon, you wouldn't have had such a nice time. Now with small bets, a few $100s here and there, the strategy does make sense. But for the vast majority of the portfolio, we have to take less risk. Now, the common narrative is that this less risky bet is simply Bitcoin. And while it's true that there's less risk in Bitcoin than in many altcoins, the price can still go down by 77%. So what can we do? I think the answer lies in taking advantage of crypto's market structure. Most altcoins underperform Bitcoin most of the time. So for example, have a look at this again, right? This is the performance of the top 100 cryptocurrencies in the last year. Again, SPX 6900 outperformed everything else. And here at the bottom, we see Bitcoin. So in the last year, Bitcoin appreciated by almost 72%. Now, how many altcoins outperformed Bitcoin? It's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17. Out of 100 altcoins, 17 outperformed Bitcoin and all of the others underperformed. And so with a larger part of the portfolio, we can take advantage of this market structure. So instead of buying Bitcoin, we can buy this here. Now, this is the exact same time frame that we see in those charts. And what we see here is again a Bitcoin chart, but it's slightly different. It's not Bitcoin relative to the US dollar. It's Bitcoin relative to Balancer. So what we are seeing here is Bitcoin's relative performance to one of the altcoins, an altcoin that tended to underperform over the long term. Now, why do we see that constant outperformance of Bitcoin over the alts? So it's not just that most altcoins underperform, it's also that the underperformance tends to be rather constant. The reason for this is tokenomics. It's an expanding token supply. Because that's how the venture capitalists and the members of the teams of all those projects make their money. They've got a vesting schedule. They get a token allocation, but they can't sell directly. They have to sell over time, and that depresses the price relative to Bitcoin. Yes, on bullish days, everything is going up. But when we zoom out a little bit, most altcoins are not doing as well as Bitcoin. Now, this is not common knowledge, but we can actually set up a position in a portfolio in a way that we make money when the relative performance of an asset versus another one is going up. So we don't have to bet on the crypto macro. We don't have to bet on Bitcoin going up or down. We can just make money when something outperforms or underperforms. Now, I've made several tutorials on that topic, how to profit from falling prices or gaining from relative valuations, or over here, how to win in bear markets by shorting altcoins. Now, it's not important what the macro is doing if we focus on the relative valuation. Again, the nice thing about the strategy is that it works in any market condition. At the bottom is again Bitcoin. Bitcoin has its massive crashes, and the largest retracement that we saw in this chart was maybe 50%, while the gain was much, much larger. So this is an 8,000% gain in relative valuation, while Bitcoin itself only made 100%. And so I'm of course sharing my own trades as well. Check this out. This is where I opened a short position, a relative short position on the Trump token. That was on April 30th. What we see here is Trump relative to Solana. Some community members entered the short as well. And then I closed the position a few days later for a gain of 142%. Now I actually shorted Trump twice, so this was an earlier trade. And again, here are a few other trades that our community members are making. So if we set this up right, if we've got risk management and hedging properly in place, there is real risk-adjusted alpha in positions like this. And so of course I shorted the Trump token again because of the tokenomics. Over time, the Trump supply increases. And it's really important to understand this concept. I believe that risk adjusted, if you want to make large bets, not just a small bet on the altcoins that might do 100x, if you want to bet a lot of money of our portfolio, then we have to bet on something that risk adjusted performs relatively consistently. So this is Trump in US dollars. And if you just bet on Trump going down, then when the market itself is appreciating, you've got a problem, right? Over this time frame, Trump did not go down. However, Solana relative to Trump went up. So that's the exact same time frame. That's a gain of 35%. So it's all about looking at what tends to do worse relative to something else over time. And how to set up those positions is explained in the videos over here. And so feel free to check it out. It's currently $125 per month. It used to be 165 at the peak of the bull run. Now attention is still relatively low, and so you can lock in the lower rate. I will not increase the rate for anybody that's already subscribed. Only the people that sign up when everything is hyped, they will get the higher price. But if you sign up now, you lock in that price. If it's your first time here, feel free to subscribe. I publish here regularly. A like would be very much appreciated as well. It helps the channel grow. Feel free to also check out Premium. Again, the link should be somewhere over here. You can just click on a link here. It should bring you to the website. And so yeah, see you next time on YouTube or see you in Premium. Cheers.